Hello viewers, today we are going to talk about the stock Lyka Labs Ltd. So first of all we will discuss about what actually started working for the company in financial year 2021. As you can see on my screen, Lyka Labs Ltd received major order for the Remdesivir injection, which we all know which was highly used in the treatment of COVID-19, and these orders were received from renowned pharmaceutical companies across the world. One more subsidiary of Lyka Labs Ltd named as Lyka BDR International Ltd. This also boosted sales to some international market despite the lockdown condition all over the world in the financial year 2021. Company has also submitted 83 submissions for registration of products to various countries. Out of those 83 submissions, 32 renewals or new registration have been already received in year 2021, and the company is expecting further 25 new registration or renewals in 21-22, which will enhance their product portfolio. If we talk about the expansion programs of the Lyka Labs Limited, the company has embarked on the expansion project of its lyophilization plant at their Ankleshwar factory, which will likely to complete it in the next few months, and this is going to enhance their capacity about 50%. Now, the measure about the Lyka Labs Limited. Recently, in a BSE filing, company IPCA had informed that their board has approved to acquire 26.57 equity in the Lyka Labs Limited, and IPCA has already bought 76,24,142 equity shares from the open market trades. And IPCA has also announced that they have a plan to launch an open offer to acquire another 20% from the shareholder of the company. The management of IPCA is very professional, so there is no doubt that IPCA must have carried out the due diligence before investing in the Lyka Labs Limited. If I talk about the earning per share of the Lyka Labs Limited, in quarter 1 financial year 22, the company has posted a EPS of rupees 6.84, which is followed by another rupees 10.38 in quarter 2. Considering the huge demand of their products, we can expect that in the second half the EPS will exceed rupees 20, and thus company will make a financial year 22 EPS near rupees 38. Now we will talk with perspective of the investor. Since Lyka presently hold 20% stake, the old promoters and the IPCA hold 27%. So the new joint management team will collectively holding 47% share in the company. It is likely that the promoters of the Lyka will try to match their shareholding pattern of IPCA. For this purpose, either they will buy from the market or they will launch a preferential issue. If we go with the present trend, the company is likely to post an EPS of around rupees 38 for financial year 22. Since we all are aware that the average pharma industry price to earning hovers around 39, so it is very much clear that the Lyka share is grossly underpriced, and there is a wide possibility of financial institution adding this share to their portfolio basket as well, according to their expansion program, the recent takeover by the IPCA as well. Although it may be too early to make any guesses, the possibility for Lyka to merge with IPCA in the long term cannot be also ruled out. If we talk about the further developments in last few months, the floating stock in the market has been dried up after the purchase of the IPCA. And another important and notable development is that the Lyka has already prepaid an outstanding debt of rupees 64.7 crore to the International Asset Reconstruction Company Private Limited recently. Now, what is the premises of the good faith for investment in Lyka Labs Limited? If we talk about, as on 30 September 21, company in their financial statement of Q2 has declared that they had cash and cash equivalent of rupees 11.2 crore and another rupees 1.36 crore as other financial asset, while the company has prepaid their debt of 64.7 crore. So the question comes to our mind is, where did the funds come from? So this is very clear that in all probability the money was generated by internal accruals and the profits of the Q3 working, because nowhere company has mentioned about loan swapping with other alternate sources, and the rest is merely a mathematical calculation of what could be the likely EPS of Q3 on its equity of rupees 28.694. According to the buyback document published by the IPCA states in their filing, the acquirer shall be entitled to increase its shareholding in the target company up to 51%, which clearly indicates that the company IPCA has plans to raise their stake in Lyka in near future. If this happens, the Lyka floating stock will fall further, which will result in a spurt in the prices. If we see at the table, the current market price of the Lyka Labs Limited is rupees 223 as on 2nd January 2022, with a current market cap of 638 crore, with a trailing 12-month EPS of 16.25, with a price to earning ratio of 13.68, with a price to book of approximate 12, with a return on equity of 87% approximately. If we see at the current table, it is very much clear that in the past the net profit margin were in negative, while in last 2 quarters they have been maintained at 45%. And if we talk about the operational profitable margin, in the previous year they were approximately 23% or 24%. In the current 2 quarters they have been increased to 66 to 69%. In the previous year the EPS was in negative, and this year it has been very positive, and the net profit has also turned into the positive direction. So this can be treated as an investment opportunity. Guys, I have a humble submission that this video is only for education and information sharing purpose. Please do not consider this as a buy or sell recommendation. Thank you, viewers.